Cathie Wood believes we're on the threshold of an explosion in innovation, and it's going to unleash the biggest economic shift in our lifetime. Artificial intelligence, robotics, and blockchain technology aren't just creating new industries, they're setting up an explosion in productivity that could transform the entire global economy. And the asset she believes will capture the most upside from it is Bitcoin and crypto. According to Ark Invest research, Bitcoin's current fair value sits at $1.5 million. Cathie believes artificial intelligence's impact on productivity will spark a massive reallocation of capital toward high-growth, disruptive assets, with Bitcoin leading that rotation. This is all happening as 5 breakthrough technologies – artificial intelligence, robotics, energy storage, blockchain, and multiomic sequencing – accelerate together for the first time in more than a century. Add Trump's new corporate tax incentives into the mix, and you get a foundation for rapid investment growth, rising innovation, and one of the most powerful bull markets in history. In this video, we'll break down how Cathie Wood believes AI will transform global GDP, why that same revolution could drive Bitcoin past $1 million, and how her latest projections reveal what might be the most explosive setup of the entire decade. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, let's break down how Cathie Wood's new data ties AI's productivity boom to Bitcoin's next major rally, and why she believes this could be the biggest wealth shift we've ever seen.
Our official for bull case is 1.5 million.
Okay.
Now, what got us to that 3.8 is using modern portfolio theory. If we were to include Bitcoin in portfolios at its optimal weight, so maximizing the Sharpe ratio, that would have provided that increment to 3.8 million. Now, believe it or not, that position size, when we did that analysis, was 19% of a diversified portfolio.
Cathie Wood believes Bitcoin's full potential has barely been recognized. In Ark Invest's updated projections, the asset's fair value now stands near $1.5 million per coin. But when modeled inside diversified portfolios at optimal weight, the number rises to 3.8 million. The reason comes down to modern portfolio theory. Bitcoin, treated as a high volatility but low correlation asset, dramatically improves the risk-adjusted return of traditional portfolios. According to Ark's data, an allocation of around 19% delivers the strongest performance profile. That figure may sound extreme, but as institutional investors adopt a more analytical approach to digital assets, the mathematics behind it becomes difficult to ignore. The logic aligns with what large asset managers are already discovering. BlackRock and Fidelity's ETFs have unlocked billions in new inflows, showing a rising willingness among funds to treat Bitcoin as a long-term holding. Each inflow strengthens market depth and liquidity, reinforcing Bitcoin's standing as a legitimate institutional asset. Meanwhile, the halving event earlier this year has begun to compress available supply while demand continues to expand. With roughly 92% of all Bitcoin already mined, any significant increase in portfolio allocations could trigger an upward repricing unlike any previous cycle. This shift reflects a broader change in how capital is managed. Investors are beginning to understand that Bitcoin is not simply a hedge but a form of productive digital capital. It offers durability, mobility, and verifiable scarcity that no other asset class provides. When those traits meet rising liquidity from ETF flows, the outcome is compounding scarcity. As the macro environment continues to ease and risk assets recover, Bitcoin's setup looks increasingly asymmetric. It is positioned not as a speculative bet, but as the most mathematically sound component of a future global portfolio. Up next, we'll explore how this investment thesis connects to a broader wave of technological innovation driving global productivity higher.
Here is a timeline of innovation. And you can see it goes into the 1700s. And our chief futurist, Brett Winton, in conjunction with academics, pulled this together. And what you're seeing here is the impact of innovation on productivity. And you can see in this time, we've had two great eras. The first one was in the late 1800s, early 1900s. Telephone, electricity, internal combustion engine. Huge boost in GDP growth. And in fact, prior to that, for the 400 years prior to that, real GDP growth had been averaging about 0.6% per year. Very slow. After that, we went into a 125-year period of 3% real GDP growth. So a five-fold increase from 0.6 to 3%. You have to move forward to today to see multiple innovation platforms evolving at the same time. So for the first time in 125 years. This time there are 5 platforms, not 3 major platforms, and they involve 15 different technologies. This is very important in terms of how to research and analyze the world. It's not going to be by sector or industry anymore. It is going to be by technology, because technology is permeating every sector, every industry, and blurring the lines between them. So you can see 5 here. We believe that the productivity uplift here is going to be so strong during the next 5 to 10 years, and I think President Trump's tax package is going to turbocharge this, that real GDP growth will accelerate from that 3% where it has been for the last 125 years towards 7% plus. And we think that could be conservative. That's a little more than 2 times as opposed to the 5-fold uplift before. So get ready.
Cathie Wood's long-term view rests on a single idea. The world is entering a new productivity era that will rewrite the global economy. Her team at Ark Invest analyzed centuries of innovation data and found only 2 moments in history where multiple breakthrough technologies rose together. The first happened between the late 1800s and early 1900s when electricity, the telephone, and the internal combustion engine lifted real GDP growth from less than 1% to around 3%. Cathie believes we're standing at the edge of a second surge. This time, 5 innovation platforms, artificial intelligence, robotics, energy storage, blockchain, and multiomic sequencing are developing at the same time. Each technology is advancing rapidly, but their convergence is what matters most. Artificial intelligence depends on energy storage to run massive computing workloads. Robotics extends that intelligence into the physical world, and blockchain ensures the financial infrastructure that supports them remains secure and open. Combined, they form a network system of exponential technologies capable of doubling real GDP growth to around 7% within the next decade. Ark's chief futurist Brett Winton calls this the first innovation supercycle in more than a century. If this projection holds, it would unleash a scale of wealth creation that outpaces any previous industrial revolution. Rising productivity would lower prices, increase margins, and expand access to goods and services worldwide. Deflation, once seen as a threat, would instead become a sign of abundance. Investors who understand this shift early could benefit from both technological and monetary expansion at once. This new foundation for growth also explains why Cathie Wood views Bitcoin as more than an isolated investment. It represents the financial system of the innovation era, a store of value that scales with technology itself. Next, we'll explore how low inflation and technological deflation strengthen that vision and set the stage for exponential expansion. And if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in.
The other thing that we think is going to happen is that inflation is going to surprise significantly on the low side of expectations. We would not be surprised to see 0% inflation or less as we exit the tariffs here and the way they're getting through the indexes, and move forward into this new age of technological explosion. One of the reasons for this explosion is not just the 5 platforms, so I should have named them: robotics, energy storage, artificial intelligence, blockchain technology, and multiomic sequencing. 5 major platforms involving 15 different technologies. And here you can see why we think we're going to see explosive growth. It is the convergence between and among these technologies. So just to give you 2 examples of convergence. In the autonomous mobility space, that is the convergence of robotics, energy storage, and artificial intelligence. Now, each one of those technologies or platforms is following its own S-curve. And we are moving into the sweet spot of the S-curve now that autonomous taxis are debuting in the case of Tesla in Austin and San Francisco. Waymo's been there for a while. Just think about that. One S-curve feeding another S-curve, feeding another S-curve. That's why we're going to see explosive growth.
Cathie Wood's models predict that inflation will not just slow but fall to levels few expect. She believes the same forces driving technological progress will bring prices down across every major sector. The convergence of artificial intelligence, robotics, energy storage, blockchain, and multiomic sequencing is creating efficiencies that reduce labor costs, energy consumption, and material waste. When innovation moves faster than demand, prices fall naturally. In her view, the next phase of this cycle could see inflation drop to near zero or even below it as automation scales worldwide. Artificial intelligence is already rewriting the cost structure of industries from manufacturing to medicine. Robots are taking over repetitive labor, AI models are optimizing energy grids, and gene sequencing is cutting years off pharmaceutical research. When combined with blockchain systems that automate transactions and remove middlemen, the entire supply chain becomes leaner. This technological deflation is not temporary, it compounds as innovation spreads. Each new discovery feeds into others, forming what Cathie describes as overlapping S-curves of adoption. Autonomous taxis, for instance, merge robotics, energy storage, and AI into a single system where progress in one accelerates progress in another. While deflation may sound negative for corporate profits, it has the opposite effect in an innovation-driven economy. As production costs collapse, profit margins expand, creating stronger companies that reinvest in research and development. That process drives asset valuations higher and fuels new cycles of growth. The outcome is a feedback loop of innovation, efficiency, and reinvestment. This environment is ideal for Bitcoin. As prices of goods decline, the real purchasing power of scarce assets rises. Bitcoin thrives in a world where technology makes everything cheaper except time and scarcity. This deflationary wave connects to the equity markets, and this is why Ark expects a dramatic rotation toward true innovation stocks.
Here is what we think is going to happen to the equity market in terms of valuations. So you can see in the turquoise there, that's the Mag 6. The Mag 6, it used to be called the Mag 7, but they threw Tesla out when it wasn't behaving like the rest of the Mag 6. So you can see from 2019 to 2024, the Mag 6 tripled. They tripled in valuation in the market cap. Whereas truly disruptive innovation in the purple at the bottom there went up only 30%. And that's because investors were playing it safe. And they were investing only in the largest, most cash-rich stocks in the market. That was a very difficult time for innovation, for venture capital generally. And you can see what we expect to happen between, well, really the next 5 years. The Mag 6, some of them will do well. Some are facing headwinds. Apple's in the AI space are well documented. And now we think it is truly disruptive innovation's time to shine in the market. I feel as though a rubber band has been stretching for the last 4 years. And it let go with the election of Donald Trump. That's when truly disruptive innovation started to shine, and the stock market started to broaden out from the very concentrated Max 6 strategies into much more widespread disruptive innovation. In other words, risk appetite and time horizon is starting to extend here. And I think the tax package, especially the corporate tax cuts, which most people haven't focused on, full depreciation of structures, first year they're put in service, full expensing of equipment, R&D domestic, and software in year one. These are huge, huge incentives to invest now. And I think that's exactly what's going to happen.
The equity market, according to Cathie Wood, is on the edge of a major revaluation. For years, investors crowded into a handful of the largest companies, driving the so-called Mag 6 to record valuations while ignoring smaller, disruptive innovators. Between 2019 and 2024, those 6 names tripled in market value while the rest of the innovation space barely moved. That imbalance is now breaking. The concentration that once defined the bull market has started to unwind, and capital is beginning to flow into the very sectors that have lagged the longest. Cathie attributes the shift to both policy and psychology. With Donald Trump's corporate tax reforms now in place, businesses can fully depreciate structures, research, and equipment in their first year of service. That single provision is one of the most powerful incentives for corporate investment in decades. It encourages companies to modernize infrastructure, adopt automation, and deploy artificial intelligence systems immediately rather than delaying capital spending. As firms move to capture those advantages, the demand for technologies across Ark's 5 innovation platforms will surge. For investors, this means the old safe havens are becoming riskier while disruptive innovation is becoming safer. Many of the legacy names that dominated the past decade are now facing declining growth and rising costs. By contrast, companies driving new technologies are expanding margins and capturing market share. Cathie describes this as a rubber band finally snapping back after 4 years of being stretched too far. The release, she argues, will send capital rushing toward innovation assets that can actually grow in a deflationary environment. This broader revaluation also reinforces Bitcoin's position. As investors rotate toward innovation, they will look for sound monetary assets aligned with that theme. Bitcoin fits perfectly within this new era of digital productivity. The forces driving this cycle all converge toward a single outcome, a new global expansion powered by artificial intelligence and secured by Bitcoin. Cathie Wood views these as 2 sides of the same transformation. Artificial intelligence multiplies human productivity, while Bitcoin provides the digital foundation for preserving that new wealth. Both rely on verifiable data, decentralized trust, and network effects that accelerate adoption as participation grows. AI's influence reaches far beyond automation. It is already improving logistics, research, healthcare, and finance. Every layer of the economy that becomes more efficient frees capital, which then seeks assets capable of holding value in a rapidly advancing world. That is where Bitcoin enters. It stores the energy of innovation itself. As productivity rises, demand for a fixed supply asset naturally follows. Ark Invest models show that even modest institutional exposure, less than 20% of a diversified portfolio, can raise total returns significantly while reducing overall volatility. In an environment where governments stimulate growth through tax incentives and technology investment, Bitcoin acts as the reserve asset of the innovation economy. Its limited supply aligns perfectly with the deflationary nature of technological progress. The cheaper the world becomes to produce and operate, the more valuable, truly scarce assets become. That relationship forms the backbone of Cathie's projection: exponential productivity supported by exponential scarcity. The next expansion won't be defined by traditional growth metrics. It will be shaped by digital infrastructure, machine intelligence, and assets that can survive technological disruption. Cathie Wood's thesis positions Bitcoin at the center of that system, not as speculation, but as the financial constant in a world evolving at exponential speed. And as adoption deepens across nations and institutions, the data points to one clear direction. The real bull market may have only just begun. Anyway, guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.